Hello, dear students. I welcome you on my channel, Commerce Wisdom. Do you know what are the three golden rules of accounting? No, don't worry. I will tell you. Every economic entity must present its financial information to all its stakeholders. The information provided in the financials must be accurate and present a true picture of the entity. For this presentation, it must account for its transactions. Since economic entities are compared to understand their financial status, there has to be uniformity in accounting. To bring about uniformity and to account for the transactions correctly, there are three golden rules of accounting. These three golden rules form the basis of passing the journal entry, which in turn form the basis of accounting and bookkeeping. So, get to know the three accounting golden rules that simplify the complicated task of recording financial transactions. Let's dive deeper. What are the three golden rules of accounting? To put it in simple terms, the golden rules of accounting are a set of guidelines that accountants can follow for the systematic recording of financial transactions. They revolve around a system of dual entry, that is, debit and credit. You have to know which accounts have to be charged and which need to be credited. These rules will assist in identifying which account to credit and which account to debit. The accounting golden rules are a set of three principles that allow one in simplifying the complex rules of bookkeeping. According to these rules, you must determine the type of account for which each transaction. Now, each account type has its own set of principles that needs to be applied for every single transaction. To get a better idea, let's take a look of the types of accounts. Types of accounts. In financial accounting, every debit or credit transaction entry will belong to one of the three types of accounts. Nominal account, a nominal account is a general ledger containing the transaction of a business, namely expenses, incomes, profits, and losses. It contains all the transactions that occur in one fiscal year. Furthermore, it resets zero and starts afresh when the next fiscal year begins. Examples of nominal accounts are commission received, salary account, rent account, and interest account. Second is personal account. You can think of a personal account as a general ledger that relates to people, associations, and companies. It can be divided into three subcategories. Artificial personal account. An artificial personal account represents bodies which are not human beings but act as separate legal entities according to the law. For example, government bodies, hospitals, banks, companies, cooperatives, partnerships, etc. Natural personal account. A natural personal account represents human beings. For example, a capital account, a drawings account, creditors, debtors, etc. Representative personal accounts. This type of personal account represents the accounts of natural or artificial entities. However, the transactions in this type of account either belong to the previous or the coming year. For example, a representative personal account can contain information on an employee's due salary from last year. Also, it can represent the amount of rent a company paid in advance for the coming year. Third is real account. Like the other two, a real account is also a general ledger, but it contains transactions related to the liabilities and assets of the company. The assets in this case can be further subdivided into tangible and intangible assets. Tangible assets include land, buildings, machinery, furniture, etc. Alternatively, intangible assets include goodwill, patents, copyrights, etc. Unlike a nominal account, a real account does not close when a financial year completes. Rather, it is carried forward to the following year. In addition, a real account also appears in the company's balance sheet. Now that you have a clear idea of the types of accounts, let's take a look at how they relate to the golden rules of accounting. Golden rules of accounting. There are three golden rules of accounting. The first one is real account. Debit what comes in, credit what goes out. Second is personal account.